It is Wednesday, August 4th, 2010. Welcome to freetradingvideos.com. D7 here. Some economic news coming out today, spurring some bullish activity. Perhaps the economy isn't slowing down as drastically as some might have thought. I think it was about 43,000 jobs added here in July in the private sector. And here we are, the Dow up 0.4%, the S&P up 0.6%, NASDAQ up 0.9%, Russell's up more than 1%, VIX slightly down, not down nearly as much as one might hope. And we are sitting at about 22 at this moment. After our markets still remain bullish, and gold did increase by 0.6% today. And here we are looking at the daily. We're starting to build this high base, but the thing I want to focus on here, gang, is we close ever so slightly over the 100-day moving average, and that moving average has been acting as resistance. We did close over it, however we're still below that trend line. So this trend line right here is still acting as resistance, but what I do like is the high base starting to develop. We get another day or two going sideways here, and then we get a pop. That could be an entry to the upside. Now I'm still net to the long side because we do remain in an uptrend, but the bottom line is we do have a rising wedge formation. And for all those who did guess yesterday's reversal pattern right here is bullish, or I'm sorry, bearish harami, you did get that correct. It's a bearish harami. The reason it's not a thrusting pattern as some had thought is because we didn't get a gap up and then a drop down below the midway point. We instead build this body inside the body of this previous candlestick, so that makes it a bearish harami. And it's not a tweezers because we don't have equal highs either, so bearish harami is the right answer on this. But now we are developing into a high base. Going back to the bearish harami, that's only confirmed if you made a lower low than the very next candlestick, and we did not get that. So we remain in a holding pattern at this moment. Right here, anytime you go into a holding pattern, a lot of times you can get wider and up day, red, down day, white, red, white. They can just alternate back and forth. So I did hedge myself going into the close, looking for maybe a drop tomorrow. So as long as we stay sideways, it wouldn't be bad to go into SOH or sit on hands. It's okay to be sitting on your hands in sideways markets. However, if you get a movement to the upside busting resistance, look to go long. And if we drop, especially if we drop below this trend line and this 1117 line coming across, if we can crack below both of those, you certainly want to be short. And I do have a number of shorts for my bearish, or I'm sorry, let me explain it. It's on the futures. They're called E-minis. They're E-mini futures on the S&P 500. I'm short contracts. I have levels of continuing to short if we do break down. So there you have it. Thanks for being a part of free trading videos where you get the very best of technical analysis.